Jonathan Baptiste with Estimate. I went through a real estate summit conference the other day and learned a lot about what to expect when it comes to investing in really rich and up and coming markets in 2025. And over the next couple of weeks, I'll be showing off a few of the different places I think will be very valuable to invest in for single families, small multifamilies, and even larger, 30 to 100 unit plus multifamily um, properties. The mantra and the idea that we had was that we want to find places that don't have too much flood of people coming in right now, but have a very stable, fixed value and consistent rents that does have that growth opportunity, but not going to fluctuate and shift too much with the up and coming uncertainty in the economy. One of the easy places we thought would be a great place to focus on was Cincinnati. It's a very affordable place, um, low cost of living, and really solid median home prices compared to what the average is in the entire country. And then rent prices are actually at a pretty good level right now, which makes it a lot easier for us to slowly increase rent over the future and giving us that delta to make that profit. And there's a very strong demand for rents, very low vacancy, high yield, and affordable properties that will help generate a lot of revenue because they're paying a little but making consistent high rents throughout. Um, it also is a very safe place to invest. Um, there's a few neighborhoods. There's a lot of neighborhoods that aren't great, but the crime rates are improving, and we found that it's great to invest in those areas that are bordering on, you know, very solid and improving neighborhoods that are becoming more and more safe. That where you strike where the value is increasing, and have that cross section of high value and but low price tags. It is a shot of the crime map as of 2023 for Cincinnati. You can see that the central inner city has a lot of red, meaning not so great area, but in the bordering areas here, um, which are yellow and orange, would be very high value because it's emerging, it's getting more safe, but the values are usually a bit slower to adjust for that trend. Some properties that we think would be great within the Cincinnati area, we could use the Estimate Real Estate Calculator tool, which quickly helps the calculation analysis process by reducing all friction with automation and some AI capabilities. So all we need to do is just press calculate and it'll automatically scrape the information from the page and other data sources to give us some very valuable insights here. We're going to be looking at three properties. This one looks pretty mediocre, 5.7% cap rate and a 0.3% cash return. Not the greatest. So let's move on to a different property here. This one doesn't look too bad. A lower price rate, good amount of rooms here. So let's evaluate this one really quickly. And yeah, a really great cap rate and a really high cash on cash return. Let's see if we could do even better than that. Awesome, even cheaper property here, more bedrooms, lower amount of bathrooms, but let's check out what we could do with this single family home. And as you can see, an amazing property right here, 11% cap rate, 19% cash on cash return. So let's take a look at this property to see what we could do. A little bit older, definitely needs some love and care here. So the great part about this app is it gives us a lot of details on the property from the site itself and from external sources. So here's some of the costs associated with it. Very low insurance, very low tax area. It looks like we could rent this out for $1,600, and another great part is that we could be very modular with it. This field here, reserves, is kind of meant for any additional expenses that you can't really find just from the data, and you can see by these images that this will need some updates and renovations. So let's put in about another $50,000 in here for renovations, maybe more aesthetic what it looks like. And let's run these calculations again, and the cap rate still 11%. Cash on cash return drops down to a 10%, it looks like still a great property here. Now let's double check what this looks like for the location, if it lines up with what we were thinking before, with the crime map that we were looking at before. So we're a little bit north of the Delhi area, and below Chevrolet. And if we go back into our crime map, we see that we're kind of here in this little yellowy orange area. So this is exactly the type of place you would want to be. Improving area, good neighborhoods close by, some not no great neighborhoods too, but in a very solid improving area here where the values really haven't caught up with how safe the location is. So this looks like a really great investment for my thoughts.